Good evening. Good evening, everyone, and a big warm welcome. Thank you so much for joining me. Sorry, I was just trying to narrow down the path where the recording from the webinar gets saved. So first of all, please can I do a sound check and just check with you that you can hear me. Diana, nice to see you again. It's been a while. It feels like it's been a while. Ladies and gentlemen, for those of you who don't know me, it's very fantastic. Thank you, Syed, as well. It's great to have all of you here. I am actually presenting this evening from Ibiza, so I'm not even in the UK this time, but yes, I'll be back in the UK obviously next week. This is just a brief holiday, nothing too complicated. So ladies and gentlemen, it's obviously an IC Markets webinar. Tonight the topic is live forex treasure hunt, tracking down actionable opportunities, and they're definitely, I think there's some good stuff going on in the markets. I want to have a look at this. I've actually got both platforms open so we can have a look at both. It depends, it's up to you, but we'll probably do it on the MT5. And then if any of you would really like to see me do it in the browser version, I can do that. So for those of you, I recognize most of the names, but for those of you who don't recognize me, I am based in the UK normally. I'm usually based in London, and I am a technical trader, a trend-based trader, so I'll trade for the most part. Most of my trades are taken on the 15-minute, 1 hour, maybe the 4 hour. Otherwise, if I see stuff and it's usually on stocks, then I'll usually be looking on the daily and or weekly. But yes, most of my day trading is done on those lower time frames. I would love for this to be as interactive as possible, so please feel free to ask questions as we go, and I will do my best to answer those to your satisfaction. So I'm just reading your comment here. Okay, good. Yeah, these 3 months have been good for trading as well, I think. There's some really, really cool stuff going on. And what I would like for you to get out of the next 60 minutes is a clearer sense of not just where the potential trading opportunities are for this week, maybe for next week, but why they are decent, like why they make sense. So on the agenda, we're going to talk about the recent movements of major currency pairs. We'll do some analysis across multiple timeframes, and I think that's really important. So even though I might end up taking a trade on the 15-minute time frame, I want you to see why the monthly chart is relevant. It isn't always the case, but certainly with some of the stuff that's on the watch list now. Then we'll obviously discuss potential trade ideas that might be setting up, and then building a watch list for all of us to consider, not just me, but obviously you guys as well. As I said, please feel free to just ask questions as you go. So let's go across to, I'm going to go do it on the platform. So I'll do it on the MT5 platform here. And I've got my list on the left-hand side. Okay, so actually, why is this not as comprehensive as my usual one? So first of all, let's get rid of this. Let's clear this whole list now as well. Let's get rid of these. I'm basically just going to get rid of all these charts here. We'll keep one, and I'll build them up again from scratch. So let's go through and clear all. So you can see how I go about doing this, and let's go through and build up that watch list from scratch. So first thing we'll do is we'll go ahead and have a look at Forex, because that makes it the most straightforward one. I'm going to add in, we'll do Euro Dollar, then Sterling, then Aussie. We'll come back to Kiwi later. So we'll do Dollar Yen. I don't really think dollar Swissy adds value these days, but we'll put it in anyway, but I don't think it's great. And then dollar CAD, go through to the miners. First thing that we need to do here when we go through this list is add in Kiwi dollar, because Kiwi dollar, I want this one up here. Okay, we'll come back to that. What are these as well? We've got different ones. Oh. Okay, hold on a second. Okay, that's the problem. All right, that's why there's an issue. I've got to do it again. Sterling, Aussie dollar, dollar yen. I'm going to leave out dollar Swissy. Honestly, I don't think it adds much value. Go to the miners, Kiwi dollar. And then we'll go through these. We'll do Euro GBP. So there's a logic behind this. That's why I want to show you this. Okay, we'll do Euro Aussie, Euro Kiwi. Then we'll do Euro Yen, Euro Swissy, and Euro CAD. We'll then do Pound Aussie. I'm going to leave out Pound Kiwi because the swings are very large, although there could occasionally be trade setups on that. Basically, what I'm showing you here, guys and girls, is how to go ahead and actually build up a day-to-day watch list looking for setups. And there are a couple of charts that it's very, like, if we remove them, we could check them again in a month or two's time, but if we didn't have them just for a couple of weeks, we'd be fine. So we've got Pound Aussie, Pound Kiwi, then we would have Pound CAD. What we would do is have Pound Yen, Where's my pound yen? What am I missing? There we go. Pound yen, pound Swissy, pound CAD. And then we're straight on to the Aussie pairs. I don't think Aussie Kiwi adds value, so I'm going to scrap Aussie Kiwi, and then we're going to go ahead with Aussie yen, Aussie Swissy, and Aussie CAD. The Kiwi, these, like, I think there was a time when Aussie Kiwi offered some amazing deals, but not so much anymore. And then we can go ahead. I think you get more out of Kiwi yen, Kiwi Swissy, Kiwi CAD, and then we could just go through the remaining ones, which is Swissy yen, CAD yen, and CAD Swissy. Okay, so that is a comprehensive list of all the currencies that I think we can worry about for now. There's some exotics, might be dollar Sing, I would say, is the only other one that I would potentially throw in here, which is dollar SEK, NOK, and HKK, which is Danish kroner, sorry, DKK. They used to be traded a lot. 10 years ago, they were traded more than they are today. I don't know what's changed about that, but it has changed. And otherwise, I would just say that there might be something like dollar Sing, a poor dollar here, but I'm not really seeing it here. I see Singapore. Pound Singapore dollar, I see nothing else yet. Pound Singapore dollar, that's it. So nothing else that really blows my mind. And ruble's got nothing going on it, so it's fine. Then let's have a look at the commodities. So we're going to look at energies. We've got, let's just do US oil so we can keep the list down. You can always go and expand on it. Natural gas is not offering anything, but I'll add it to the list anyway. Then we've got metals. Let's do gold. Let's do gold. We don't worry about silver for now. I'm not saying never. All the things that I've excluded here, you can check them. But I would say for the last 2 years, if there's been a trade set up on any of those, it's been very rare. So therefore, I'm not too stressed about it. And the rest I would kind of leave out of it. So let's go with gold. We've got oil, soft commodities. These could be interesting. So they could be interesting, but we'll come back to those a little bit later. The indices is the next big one. Majors. We start with the Dow, the Tech 100, which is US Tech, then the 500, Russell 2000. If it is here, we don't have that. We'll do the DAX, the German one, the UK, then possibly the ASX if we want to do that. The Nikkei and Eurostoxx, these ones are just replications. So the European ones, the DAX, between the DAX and the UK, you've pretty much covered Eurostoxx and the French CAC as well. So Nikkei, we could leave out of that as well. Minor ones, the Hang Seng, not a problem. Possibly this one, so I'll add in the Russell 2000, but that's a thin one. Okay, so we've covered commodities, indices. Should we look at cryptos? We could maybe do that. Again, what I would do is, is Ethereum. And there's no judgment here, by the way. If you don't like a particular crypto, or you don't like a particular currency, then that's fine. You don't have to like it. You're not being forced. Absolutely not. So there's a couple of these that could be of interest. I'll keep it simple for now. NAS 100, thank you. Did I miss something there? Did I miss a NASDAQ? Did I miss it? No, I got the US Tech. There we go. We're fine. Then we've got bonds, custom stocks as well. So the stocks in this case would be our favorite ones. Would be things like Apple, Microsoft, any of the big ones. If you want me to add those, just let me know which ones you want me to have a look at. Just type in, let me know which ones you want me to have a look at, and I'll throw those in. Otherwise, I'm going to keep this as it is for now. I'm going to throw in euro because we need that data there. I'm then going to chuck these out. So you just hit backspace or delete to get rid of these ones here. Just get rid of those. I want to get rid of this one. I don't want that there. That's it. So that is my comprehensive list. Move Kiwi dollar up. And that pretty much covers everything that I would need to do on a more regular basis. There was something else in the wrong order, but it doesn't matter. There we go. So ladies and gents, that's really where we've got most of our, it's not a ridiculous amount of charts, and we could find most of our trade setups on that. And we're going to be focusing more obviously on currency pairs. We'll focus on that as well. But the goal here is really to get a sense of where those opportunities lie. So I'm going to present my case to you. I'm going to say to you, this is why I think this is a good setup, and it should make sense to you. So my arguments, my evidence, all of that should really make sense to you. Apple, cool. You've got Apple and you've got 156 elements here. Great. Okay. One of the things you can do if you want the platform to move faster is break it into different, create different like symbol lists or whatever. And then if you know for the week you're only going to be using currencies, you could just jump between those lists so that it uses, because all the data that you're using here, all of this download speed is updating every single instrument you have here. So that consumes quite a bit of bandwidth, and it adds to the, I guess, to the usage of the platform. I mean, it's very, I mean, these today computers are more powerful than these things here. So it's not a problem. In fact, I would say today, for the first time ever in history, the computers are more powerful than the requirements for most people. Most people using, Microsoft Excel and a browser and all kinds of different things, that computers are very much too powerful for that. Anyway, so let's go through this. Let's start with the one thing I didn't see, and I might have missed it, is we don't have a dollar index on this, do we? So there isn't a dollar index DXY on any of this stuff. So if we go up here, we don't have, we do, holy cow. We have a dollar index here. Ladies and gents, this is the US dollar index. So basically it's the US dollar against the basket of other currencies. The very annoying thing is it's a futures contract, so it has very little data, and we only have this one here. So it's giving me literally 4 days worth of data. That's all we have. But however, what I would say, check this out. The current daily candles for me was a really nice bearish candle, and therefore what we can take away from this, especially if we now swap this. So let's go and have a look at euro dollar. So I'll go to euro dollar and bring it in. You can see we've got a nice, currently it's sort of a bit of a bullish candle for me. It's actually a monthly, I beg your pardon, it's not a daily thing. Let's go back to that. And if you hit your spacebar, if you just tap your spacebar, you will see here at the bottom left-hand side of screen, you will see it says the symbol or the period. I'm going to type in 1440, which is a daily, that's the amount for daily candles. It's just something you learn over time, and that jumps me through to a daily. So if you're ever interested in changing the time frame via typing in here, you could say 240 and it just changes it to a 4 hour. But you can't, unfortunately, you can't have anything other than what's up here. So the reason I wanted to show you this is that if you now look at that dollar index, you can see that we've pulled right back down. The dollar index is really the US dollar's performance against the basket of other currencies, which includes the euro, which is the biggest component. Then you've got sterling, Japanese yen, you've got Swiss franc, and a series of others. I think you've got one of the kronas, Danish krona, Swedish krona, one of those. And so you can see if the dollar in general is weakening or quite strong. We've had a very, very strong dollar for a very long time. But what's changed recently so far is we've had a bit more of this is quite a bearish reaction at this time off the 110 level. And we can see the price is currently coming in. So what it will normally do, so this is what I wanted to show you, it will normally come in to test at the previous high. I'm going to change the color of this because I want us to recognize a line that I draw versus the software's automatic calculation. So we'll make it a nice obvious color. I'm looking for pink, but I can't really find something like that we could recognize as clearly me versus the computer. What happened there? Okay, so I'm using candlesticks, just so you know, to give you some background. I'm also using a tool called Fractal Support and Resistance. This is freely available. So for some of you who know me, I've already spoken about that in the past, but it's called Fractal Support and Resistance, and it will automatically calculate support resistance levels on the chart. So I'm just highlighting that we often get price pulling back into a previous high. So we could finish with a bullish candle here and price could attempt to push back up to these highs, but something else is changing. In addition to that, if we go to the daily, I'm using a 50 period, 20 period, and 10 period simple moving average, nothing complex. And finally, at the bottom, I'm using a MACD and RSI. These are usually with default settings, nothing too complicated. Again, both of these indicators are there just to look at the momentum of price. I can use these two indicators together for the same reason, basically 3 different reasons. 1, confirm if a trend is still healthy, and therefore there are still trading opportunities in that trend. Or 2, give me a heads up if the trend is running out of steam, if the market is losing momentum, which is basically not to say change directions, but just maybe don't take any trades or lower my risk, my position size, reduce my risk. Or 3, there might well be a change of trend in the near future, stand by. Then I can get in on the new trend to the upside. And that's kind of something that has been potentially showing up here, is that we slowly but surely have been getting a little bit of a sort of, as we get a higher here, we get these higher highs here. We've slowly been producing sort of lower highs. So the MACD is producing lower highs. The over here as well, RSI is also producing slightly lower highs, implying that this is losing steam. But it could still go up here and then produce a lower low and a lower low. So we haven't really had that confirmed change of direction. But what I would highlight, especially if we go look at that euro dollar, so I'm giving you a sense of what's going on in the general markets at the moment. We go look at euro dollar, we can see this upside down. This is where it starts to look a little bit more obvious. You will see here, we have a nice low over here, low over there, lower over there, but you can see over here, we're clearly producing higher lows. So that low and that one are higher. And also here as well, same thing again, we've got high lows. So there's definite bullish divergence in here. And it's relevant because we are very overextended, like ridiculously overextended. And therefore there could be a potential correction. So every time frame is supposed to have, within reason, move, pull back, move, pull back, move, pull back. We've just had a move. So this could very well be our very first pullback. And where would it pull back to? Well, we could see it pulling back to these lows. That's feasible. We could also see it pulling back to these lows. I would say at the very least, that would be the first one. We have that potential of pulling back to. This is also very feasible. Could we go further than that? Could we come up to here, which is this level here? Yes, we could. But I think it's fair to say we should pull back to this, if not to here. What would that be in terms of a Fibonacci retracement? So what we're doing now, for those of you who might not appreciate where I'm going with this, I'm giving you an overall assessment of the state of the currency markets and what they are very likely to do over the next few weeks if they continue to produce these signals, and if they do, where the trading opportunities will lie, specifically with which pairs and which levels we need to be watching out for. So I'm just going to place a couple of levels in here. So let's do one there, and let's do another here. So there. And the next thing I'm going to do is use a Fibonacci measurement from the top down to the bottom, and I'll change the colors. We'll just change let's just go edit this a little bit. Let's make this a nice dark blue color. Let's get rid of the 20th. Well, we'll keep that for now. We'll get rid of the other ones. There we go. And so we have these different areas where price can pull back to. So if we come back into this area here, it'll be close to the 23.6. And if we pull back further, it's back into the 382. So you can see that actually even coming all the way back up from where it is here into these lows is really only a 382 or a 38.2% pullback. It's not ridiculous. It's not, I don't think it's completely unwarranted. All right, so that is a possibility. That's all I'm really going to highlight with that and say that that is a possibility. For me to feel that that's actually going to happen, I need this current monthly candle to finish up near the highs. It has to finish as a very strong bullish candle. You can see as the market broke through these lows, it started to reject the wicks, push back up, and then come down and push back up, and come back down and push back up. And so in a way, what it has now produced is, I was looking for the best way to draw this. Why am I missing an object here? There's something I'm missing here. No, remove. We need something here. Here we go. Okay. We have something that has formed in here that looks pretty much like a nice little platform there. And again, we'll do this as a nice pink color, so it's really nice and obvious, and make it nice and thick. There we go. And so we get this nice little area where clearly price is struggling to go past below that. And if we finish with a strong bullish candle, ladies and gentlemen, that is a strong indication, combined with all of this behavior, combined with the fact that it's overextended. So all these things just add up to tell us that this is probably going to be, especially if October breaks the high, that we get a nice swing low. That implies the market is ready now to move to the upside. As crazy as it seems to be able to plan these things on a much higher time frame, it works very well. Okay, so if we look at it from a monthly basis, this trend is beautiful. So if I was to show you an example of a trend that is very nice and healthy, this would be it. because it's just, you can see it's rhythmical. It's got this sort of repeatable patterns. The angle of it is sustainable. It's not going too fast. It's going down at a steady kind of 45 degrees, 35 to 45 degrees. The moving averages are all fanning out. All of this is very sustainable and healthy. And that is the one argument that says this market might want to keep going. But countering that is this. We had a move down to this low over here. This red candle bounced off the low there, pulled back, pushed again, and actually stopped where it is now. Stopped immediately. So the difference between the low of that candle, if I draw it, is there, and the next low is like, and the lowest point is there. And the market has already started to push back. So what happens is the market will start moving down aggressively, then less aggressively, deeper retracements, less of a move, deeper retracements, and then it starts bouncing back. It starts changing direction. So that's kind of what happens with like a ball that starts losing, that sort of stops bouncing as high and stops going further down, and then starts bouncing the other way. So we've kind of got something very similar happening here. In addition to that, we've also got a little bit of bullish divergence. It looks a lot more obvious when we have a look at it on the daily time frame. And the only other thing I want to do is just adjust this RSI to something like 8 to magnify those peaks and troughs, so it's a bit easier to see. Just going to take a quick drink of my water. I'll have a look at your questions and then we will carry on. Right, let's have a look at your questions. How do you do analysis on MT5? Hold on. How do you do analysis on MT5? I find it is quite complicated. Yes, it's a you sort of get used to it over time. I think for beginners it's probably quite tricky, but over time you can your brain has now freed up the space where you're trying to remember all this new information. Your brain has kind of got the hang of it. So imagine when you're learning how to drive a car, in the beginning, you've got to remember how to change gears and check your blind spot and your indicator and put your foot on the clutch and you're learning all that stuff in real time. But then there's a point you get to a few years later where you can drive without even thinking about it. You can daydream and drive all the way home. It's the same kind of thing. So your brain frees up the space. And so for me, first of all, the goal is to keep the analysis simple and highlights the key points, which is what I'm doing with you guys. And then you find that your brain is kind of free. So over time, it's easier for you to do it on a platform such as MT5 because you can have one chart, change the time frame, you're noting all the key things you need to, and you move on. Whereas I do think, yes, maybe in the beginning, if we go to the browser platform, it's quite cool to have all these multiple tabs open and to, you can make notes here and you can draw certain things that you need to do that. They also, they also suggest why for beginner traders, or when I say beginner, I don't mean to be disrespectful. I'm saying that anyone until they kind of achieve consistency in their first 6 months or their first 2 years, they might have a journal. And in a journal, you might want to make notes so that you could just things that you want to remember that you might forget if you're not paying attention or something. So let's go back to this here. Okay, so what else makes this a little bit more bullish? You'll notice that this is the daily instead of the weekly. So the weekly, we had these lows here, and then you had all of these lows here. But if you come down to the daily, there's a little bit more information to that. So you've got this low here, but you've also got a little bit of a difference between these lows and these lows. You've got definite bullish divergence creeping higher there. So you've got a high low on those. Same thing here, you've got a higher low, and these are getting higher as well. You can see this is starting to trend higher. So these are bullish, and we've also broken the highs here. So some of you, especially you, Diana, I know you guys you've been around, but I've done this analysis on the indices, which I think we should do 2 minutes if we get the chance at the end. But I was saying to you that when you have a trend that changes, a downtrend, there's a couple of things you have to see to know that the trend is shifting to the upside. So first of all, you want to break above one of these highs, these recent highs. You want to do that. So that's certainly one of the things you want to tick in your box. The next thing you want to do is to have ideally is have a higher low. So you want, I did that terribly. You want to have a low and a high and a higher low and a higher high. So you need to have an uptrend in price, but if you can also break above these, then you get two things. You get price, not only the market testing these highs, which in this case it's actually done here, it's broken above this high. So price came down, this is the highest point, and it went down to this low, and since then it's managed to break above here. So that's the first thing it's done. What we need to do now is to see a higher low and to see price go up. And then what that does is that'll give you more a sense of price shifting. One of the other things on my list, if you remember, was the 50-period moving average. So we've got this 50-period moving average. You will see here, we couldn't quite get above it. We keep trying coming back up here, can't quite get above it, but we're almost above it where we are right now. So one of the other things we have to do is, aside from getting a higher low, is make sure that by the time we do that, at that point we're above the 50-period moving average. And then at that point, it's almost certain that our daily at any rate is going into an uptrend, like a proper uptrend. Looking at your questions again. Yeah. So how do you use psychological numbers? Okay, cool. Okay, so the questions that have come in so far, please keep them coming. I love it. How do you, do I use psychological numbers? Absolutely. So I think in this case, we're talking about parity. So that's 1.0. That's a psychological number. The best example I can always think of is if you think of dollar CAD and the US dollar. So right, the US and their neighbor, which is Canada. And I think the US always thinks of Canada as a very small country. So psychologically, it must throw them if there was at any point where the Canadian dollar is stronger than the US dollar psychologically for them. So that parity, that number of 1.0000 must be tough for them when they get to those levels. They could see that the dollar is weaker or stronger than the Canadian dollar. So definitely a psychological aspect of round numbers. Have I got a link for the fractal support resistance line? I will find it for you in a moment. And I get it. And double bottom, absolutely head and shoulders. These patterns for all of you, the double bottoms, double tops, head and shoulders, those patterns are absolutely fantastic because often, a double bottom and a head and shoulders, they are basically a change of trend. So I see them as additional evidence that things are potentially going to happen. I do think that a double bottom with bullish divergence on these indicators is worth way more than just a double bottom. If I get bullish divergence on an indicator with a double bottom, the degree of confidence in that is as good as it gets. And price needs to break of structure. That's exactly right. Break of structure, BOS, break of structure. You're definitely going in the right direction. So yeah, we've got these breaks. So that's what we need to see. So this is really what I'm looking for. I'm looking for the euro this week to find some support in this area and to work its way back up. So let's go down to the 4 hour. And you can see right now it is in an uptrend, it's coming back down. It's got to find some support in this area. If I had to highlight an area, it would probably be somewhere in this area where I want it to find some support and to work its way back up. And the best scenario would be by the end of the week if we're closed and we break above that high, because then we'll finish with a very bullish candle, and the idea of the euro starting to work its way back up is going to be great. It isn't guaranteed. It isn't guaranteed. Price could come all the way back down here and wobble a bit, and then maybe by Friday it closes up there. So, the dollar is still very strong. The question now is the dollar going to take a break for a couple of months, or are we going to see the euro, or is the euro going to start to strengthen on its own? Because that's the one biggest mistake that I often find a lot of, again, newer folks make, is they keep thinking it's always about their local currency. So people in the UK are going, well, the pound is strong or weak. And actually there's two parties involved. So if you see the euro spikes up and the pound spikes up same day, and the Australian dollar spikes up same day, then it's not those, it's clearly the US dollar. So we must never forget that there are always two parties involved when we're trading. And so ideally what we want to do is get a sense of how they're all going. So in order to do that, let's look at all the euro pairs now. Let's look at Euro GBP, Euro Aussie, Euro Kiwi, Euro Yen, Euro Swiss, Euro CAD to see if there is a common theme. We'll go to the daily. What I want to do is look at the last 6 to 10 candles to see if they are going up, down, or sideways. So let's look at Euro GBP. So Euro GBP, if we look at this here, it has been trending up. It's definitely finding a bit of resistance here, but it is in an uptrend. Okay, and it's clearly sort of at the top of a range. Okay, that's fine. What does Euro Aussie look like? Euro Aussie also in an uptrend, coming back down at the moment. So interesting, very similar structure to Euro Dollar, very similar structure to Euro GBP. Here's what's interesting. This is almost an inverse head and shoulders. Okay, this is a great example of that change in trend. Comes down, turns around, goes up. That's what we're seeing here. Downtrend, comes down. There's my last high. We broke it there. So price came up, broke it, produced a high low, and is above the 50-period moving average. So this is definitely more bullish than bearish. Look at that. We've got a higher low, higher high. We've priced it. Here's the 50-period moving average, and we've broken this high over here. So there's a whole lot of things that we've managed to do which imply that it should generally be trending higher. Let's see what else. We've got Euro Kiwi, also trending higher, uptrend here. So in all of these so far, the euro is strengthening against all these other currencies. Let's look at Euro Yen. Herein definitely trending higher. Okay, also an uptrend, also having sort of reached a bit of a level of resistance. Yeah, that's fine, but we are still trending higher the last 6 to 10 candles. Euro Swissy. Okay, so Euro Swissy is an exception here. So this is interesting to me. So far, Euro Swissy is currently in a downtrend. It did do a bit of a deeper retracement. If we look at it from a weekly perspective, overextended, tempted to retrace, and is now pushing back down. We'll come back to dollar CAD in a moment. So that's interesting to me. So that my question then is this the euro that's weak, or is it the Swissy that's weak? So one of the things I'm going to do quickly is quickly look at pound Swissy to see if that's also the last 6 to 10 candles have been going down. Yep, last 6 to 10 candles very bearish here. Let's look at Aussie Swissy. Also trending low on Aussie Swissy. Let's try maybe CAD Swissy, maybe. Certainly dollar. Okay, so the last few candles going down here, and finally let's do dollar Swissy as well, which I didn't include on the list for that specific reason. So now, of course, I have to eat my own hat. So the point is, it's the Swissy pair that's actually bringing Euro Swissy down. It's not the euro. Let's see Euro CAD. Is Euro CAD going up? Euro CAD is trying to push up. It's so far has rejected the top here, so it's struggling with this level of resistance. But again, you can see here, guys, generally going down. And now it's sort of potentially doing that thing where it might end up breaking here and starting to go up that way. So that's interesting. You've got bullish divergence, meaning the markets are trending higher. So although you've got lows here and lower lows, you've got a higher low there. And again, also here, you've got a higher low. Okay, so there's this, the implication when I look at this is it desperate to break up and go up. But you can't, very important, you don't take a position now. You can't buy now, because what it could do is just consolidate, and then the divergence just works its way out, and then it carries on down. But if you do get that you get that breakout to the upside and bullish, then you get the price action confirming what it should be doing, and then you can start looking for buys. So the euro, ladies and gentlemen, relatively strong. So what is my trading plan for all of those pairs? For all of those pairs, I'm generally looking for price to come back and find support, looking for nice little bullish candles and looking for buying opportunities to the upside. If they come down, that would be on the daily, or even on the 4-hourly. For a lot of them, for example, let's say Euro Aussie, nice little bullish candle here, a nice little bullish candle if it looks and it starts heading up. Even on the lower time frames, there'll be some good buying opportunities in that direction. So basically, I'm looking for the daily to confirm where the daily is going, and then looking for trading opportunities either on the daily or the lower time frames in the same direction. Cool. Let's have a look at dollar CAD, because that came up. So dollar CAD is taking a bit of a hit here. Specifically, I think what's worthwhile mentioning here is this rejection over here at this level, another rejection here, and another rejection here. And what do you call these two rejections here? We were looking at a similar thing on the other charts upside down. What would we call that now? So there's a rejection here and then another rejection here. Okay, so it's a very interesting potential change in direction. Let's go down to the 4-hour. What do we see? We see an uptrend that has now become a downtrend. And so similar to euro dollar climbing, we might have some dollar CAD opportunities for selling. Could be some really good ones there as well. We have an uptrend on the weekly, but we have these rejections over here. So it could be some shorter term opportunities down into these levels. We'll have to see. Dollar CAD is not as clean cut as some of the other charts are. But it's interesting when you look at it from a monthly perspective, you can see here, price is coming back into this area where it had support in the past, and possibly going to produce a bearish rejection candle. So it could be finding resistance, and then it's possible we could see it start to work its way down like that. Okay, good. So you're really looking for a sale there as well. Yeah, so yes, selling for me is, feasibly I'd be looking for that. The only areas where I'd be a little bit more cautious as we come into these bits of funny patches over here, where it might kind of find a bit of support, but I just make sure my trades get to break even as we get down to these areas, that's all. So go down to the 4-hour, for example, you've got a bit of room before you get to that area. Okay, then. Sorry, just getting a quick drink of water. Euro pairs looking nice and bullish. Let's run through the GBP pairs. Pound against the US dollar. So here we go. The monthly is really interesting to me as well. So again, I should actually show you this on euro dollar, but we'll do it on sterling. So we have currently got a nice little bullish rejection candle. Now, to be fair, ladies and gentlemen, we're almost halfway through the month. We're not close to the end of the month, so this whole thing can completely change shape, and therefore the story can change. But this is interesting to me. If you kind of highlight that low there and that low there, we've got a potential bit of a rejection off this level. We've had a big move down. You know, we could be due for a bit of a correction to the upside. Yeah, we might have a couple of levels here where the market will come back into sort of these areas here. So this might be the equivalent of a minimal retracement. There might be a bit of a bigger correction back up into these highs here as well. So again, I could take out that Fibonacci measurement, measure it from the high down to the low, and we've got a 23236 and a 382 up here. So these are areas all and a 50 fib. Lots of potential for the markets if we follow through with, if we finish with a bullish candle here. We've got some room over the coming months to see principally where the market's going to go. And of course, if it happens for both euro dollar and cable, it's also potentially going to be just about a weaker US dollar. Now, for those of you who've started getting into trading in the last year, you might think, well, it's always about the US dollar. It's not. In the last year, that's really where we've seen the US dollar sort of step up. But in the last 4 or 5 years, the US dollar has been a bit all over the place. So it really has either been weak and strong. It really hasn't been just anywhere. We've had some strength coming on euro, some weakness on euro. We've had a mixture. But whereas just the last year, unusually so, we've had the yen pairs moving like crazy and the dollar moving like crazy. It's not always the case. And it will not always be the case going forward. So please understand that. Okay, hold on a second. Let me look at dollar CAD again for you. So we'll go back to dollar CAD, open up another chart window. To go long on this, so my concern is this. Here's my concern. That's 2 rejections here. So we've had 2 rejections here and 1 over there, which means usually the more rejections you get, the more it's going to get knocked back down. That's my concern. I think that here it's stronger. It's more likely that it could find its way back down towards 1.289, something in that area. Go look at it from a 4-hour perspective. We are currently in a bit of a downtrend. I'm not convinced just yet. I mean, there is a bit of a extra hidden divergence on both of those cases. It could be nothing about this is really an obvious kind of setup. Level of support here. For me to go long on this, I prefer to break above this high. So in other words, I need to have this current downtrend break and go back into an uptrend for me to go long on this just yet. Currently, I just see a lot of reasons why the daily might try to come back down, could find support. I'd rather wait for the daily to produce a bullish candle in this area and then go back up to that. Yeah, I'm not getting enough bullish signs on that. Although this is correct, we are on an uptrend. It's just that this gave it quite a scare. It's been kicked twice and it's coming back further. And therefore, it might want to go a little bit further before it kind of settles down. That's my concern. Let's just go back to these. Sorry, I wanted to have a look at sterling. So let's go back to this chart here. So if we finish this with a nice bullish candle and we break through that in October, we could see a nice move to the upside. It would be similar on the euro, and therefore we could see a minimum move up to here, probably a reasonable move back in towards the middle here. Could we go further up? Sure, but I'll deal with that when we get there. And then I want to compare that. I want you to see this with Aussie dollar, US dollar. So I'm trying to give you a sense of where all these charts are giving similar signals and what that could mean. Okay, so again, here on Aussie dollar on the monthly, potential bullish candles. We've got a nice little bullish candle here previously, and another one for me here, which is similar to a bit of a double bottom. I know maybe you think I'm stretching it, but no, this is genuinely how we could actually count these. You've got a nice bullish candle there, another one there. If we get that bullish divergence, it's the same sort of signal. And again, we could see the market coming back up to these highs. So that being Aussie dollar, US dollar, let's look at Kiwi dollar. A little bit of a similar setup here as well. We've got, price coming down here, rejects it, starts pushing back up, and we've got if we get a bit of bullish divergence here, we could see a bit of a pushback there. So quite a few of these so far are giving a hint at that. The only one that's bucking the trend, which it always does, is dollar yen. So dollar yen is still looking very bullish. Let it load up. Just let it load up quickly. And the only thing I'm noting here is a little bit of bearish divergence coming in here, which means that although we are getting fresh highs on price, we are starting to get lower highs here on the RSI, a little bit so on the MACD. And what does that mean? It means that somewhere in the future here, we could see the market either reach a consolidation or change trend. But again, as I said before, until we see a change in trend, we can't sell. If we sell now, we don't have that evidence. This could consolidate like it did here and then just carry on up. So we definitely don't want to be selling until we get that change of trend. But it is showing some signs of exhaustion. So I do expect in this area now to start seeing more big rejection candles. Those will be the clues, and potentially coming back down to here. So we might get something like that. But again, this is on a weekly chart. So this is something that we would see over the coming month or two. Having a weaker US dollar would definitely add to that picture. Cool. Is price above the 50 days moving average as additional uptrend confirmation working with all pairs? Yeah, I'm kind of throwing it in as that. To me, I see it as an extra bonus. It's definitely not a contradiction, it's a bonus. So yes, if we're operating above the 50, we should be generally bullish. If we're operating below the 50, we should be generally bearish. And to sort of point to nail that home, let's go look at the US indices very quickly. Most people want to know, how do we know what's going on with the markets at the moment? So when we look at it, and the weekly is the one that I would really focus on. This is where I find it's the most reliable. We go to the weekly chart. On the weekly chart, we are generally in a bull market if we're above that 50. Once we start coming below it, things get a little bit messy. We're still below it now. We're almost possibly, and again, this is a possible, we could be about to produce a high, low, high, high. So we could be about to go into an uptrend here. We've broken this high. So here we broke this high. We've ticked one of the boxes. We could be about to produce a higher low, which would be ticking the second box. And again, if we break this high, we go into a confirmed uptrend. So we tick a third box. And of course, at that time, we would immediately be over the 50-period moving average. We would tick a fourth box. All of that would be impossible to do if the market was inherently weak and flawed and sick and due for another crash or something. So that's why I have multiple things in those cases. And actually the 50-period moving average in that case is, I would say, that is an additional piece of evidence, but the others are definitely a fact. Breaking a previous high, producing a higher low, going into an uptrend, those are all key price action things that say this is what's what. Thank you for asking that. And so that's what I'm watching for on quite a few of these charts. Okay, so I was gonna say, if you go to YouTube and you look up, this is for any of you who don't know me, some of you do. If you go and look up Adam Harris, and you can look up like London City Trader, any of those should bring you to my channel, and then you can just subscribe to that. So if you do that, I'll give you get a weekly analysis, which is exactly what we're doing now, which focuses on specific things. So if you just want that as an extra bit of a go-to to build up your analytical skills while we are doing all this stuff as well. It's the same stuff. So it's just to give you that, if you're away on holiday or you can't attend a webinar, you've got that option as well. Okay, so and the beauty of these webinars, ladies and gents, you should feel free to bring questions. Bring questions that you have between the webinars, bring it and ask me. And if I've got the time, I will cover it with you. Okay, so this is think of it as a sort of a technical analysis session combined with / a bit of mentoring, if you want that to be the case. And the only time I really don't answer questions is either if it's really not relevant or actually if we just don't have time. But I will always do my best to do that. So let's go through the pound pairs. Are the GBP pairs bullish or bearish? Okay, so here I'm going to we'll go back to the daily, not finding them very, very strong. Okay, just highlighting that. Pound yen is very bullish, but that's the yen, that side of it, the yen components is pushing it. Pound Swissy, we know, is very, very bearish. It's a nice healthy trend for the most part as well. So this would sit potentially on my watch list for trading opportunities. Okay. I also think there's, for the most part, it's looking good. Pound CAD is also a little bit bearish. Okay, on the side, it's got a bit of a downtrend. So I think it's pretty clear that the Europeans have all got a bit of bullish divergence in them. They're potentially looking like they're getting ready to try to do a bit of a retracement. Sterling against the US dollar is maybe trying to turn around on the monthly, but most of the GBP pairs are weak by comparison, and so that they are probably going to struggle to turn around anytime soon. They might, but there could be a lag. You could find the euro starts turning around now, or the euro pairs start turning around now, and the pound starts turning around about 1 or 2 weeks later, as that can happen sometimes. Let's look at the Aussie pairs as well. Aussie yen is obviously very, very bullish. We had some weird gaps, ladies and gents. I've not seen many times in my entire life where we had big gaps of, 10, 20, 30, 40, 50 points across multiple charts here. Very odd. I don't even know why. Don't even have an answer for you. So, okay, so Aussie Swissy is a little bit more bearish down towards these bottoms here. Let's see it on a weekly basis. Major level of support. Yeah, could be potentially something here. We'll see. We've got a series of lower highs coming in. Maybe it wants to break lower. So Swissy pairs could keep going lower. So Aussie Swissy, Euro Swissy, Pound Swissy. I would put those on my watch list for possible bearish moves to the downside. That means the Swiss franc is strengthening because all the other pairs are weakening against them. Okay, Aussie CAD, let's have a look at that. Let's go to the weekly. The weekly, this could be finding a bit of support. Although it's in a downtrend, I think that is looking more and more bullish these days. Potential higher low here as well. And then if we have a look here, we've got the Swiss yen pairs. So here we're going to look at the yen pairs. You can see how many of them are definitely overextended. Fractal support resistance. Okay. Fractal support resistance, MT5. Is it this one? I feel like it's one of these. Just go through these ones. Fractal support resistance indicator spot. There we go. There's the link. It's free. Should be able to download it. I think it's great. Where is it? Come on. Should be here somewhere. So I'm going to send you the link. I'm going to put it into the chat box for you guys. Will I find you the link for that one? Yep. Here we go. There is a brilliant question that's come through that I wish people would ask more often, but how would you know? Adam, do you think as a beginner, it wouldn't be better to stick to one pair? So here's reasons why I think it would be good to stick to a few pairs rather than just one pair. I don't think one pair is the solution. I think that 1 or 2 or 3 pairs is okay. Here's the thing. I learned the hard way down the line that I should be focusing, or I should consider focusing on general market conditions. So if I'm looking to find money or find trading opportunities, I should focus on any charts that has trending. So in other words, I'm looking for good weather conditions. So any chart that has good trends is where money-making opportunities lie. Whether that is the S&P, whether that's euro dollar, such and such. I know lots of people who've been trading the FTSE for years and FTSE is terrible. Meanwhile, the S&P is easy and safe by comparison. So I always think that based off that and based off my personal experience, one chart is too dangerous because you could have that chart could be in very much sideways motion for 3 months and you're trying to trade it thinking that it's going to behave and it's not behaving. And if you just like looked at another chart, there's another chart that's much easier to trade by comparison. So my recommendation would be not just one chart, but at least, let's say, 3 different charts, whether it's an index or a currency or a commodity. Maybe have a look at, kind of try and pick your favorite 2 currencies and 2 commodities and 2 indices. Something like that would give you a mixture of different markets. But what should happen is they should hopefully, one of those should always be trending if you're going to trade trending markets. And that's an example. And the argument for I look at all of these. So I have about 40 charts that I pick from. But the argument for trading only 2 or 3 charts versus 40 charts is sometimes, yes, I have a colleague I work with that I trust immensely who's very good. She trades the DAX. That's her go-to chart. She does that every day. She knows its behavior. It's easy enough for her to trade. So indices are great because indices will trend a lot more than their range. That's what they do. They go up or down, but they don't go sideways as much as they go up or down. In fact, they go up the most. And then they go sideways and down sort of the rest of the time. Whereas currency pairs tend to range a lot because you've got 2 different parties. So with commodities and stocks, you've got, you know, supply and demand of one instrument, but the euro dollar, you've got supply and demand of the euro versus supply and demand of the US dollar. So it's a little bit more, another layer of activity. But yes, she, you know, I trust her, and, you know, for her, she likes it, and it's enough for her. She does it 2 or 3, you know, she has an hour of trading the US session as well when it opens, the DAX and maybe the Russell or something, and she's done. So for her, that works for her lifestyle. So there's an argument for that. So yes, I would just wanted to give you arguments for both sides of it, and that would be why. Yeah. Thank you for asking great questions. Other ones quickly, because I'm keeping an eye on the time. Which pair would be good for beginners to learn price action and all this technical analysis? I think, you know, I'll do a list. I'll just quickly type them. So just kind of the idea being to sort of give you something to work with here. I think if I was looking at currencies, you know, euro, dollar, gold, euro, yen, S&P 500, DAX 40, it's 40 now, pound, yen, you know, these are all euro, joy, euro, yen. Some of the yen pairs are amazing to trade sometimes, not just this year, but sometimes they always are. Yeah, I think gold can sometimes be something to maybe worthwhile focusing on. You could also throw crude in, but I hear some of the people that I whose opinion I trust, they will trade probably more the S&P, the indices, and maybe gold, and then a couple of currencies. So yeah, that's what I would kind of go with on those ones. I think the reason I might suggest an index is because, as I said, an index, especially a US index, can trend really well. Honestly, if you look at them, you look at the US indices here, let's go, I'll demonstrate it quickly. You know, you look at some of these historically, and you can see these periods here where they spend a lot of their lives doing that. This is something they only spend about a sixth or an eighth of their lives doing. They do most of that their lives. And then if you compare that, so that's the US, so that's the Dow. If you look at the NASDAQ, it's a similar thing. You look at the S&P 500, similar thing. You look at Microsoft or QQQ, which is obviously another ETF. You look at the DAX. It's still got trending moments, but it's not as trendable as that. We look at the FTSE, it's horrible by comparison. It's a nightmare, I think. It spends most of its life doing that, not trending as well. So those are the arguments I would say for going with those. Natural gas, crude oil. I mean, we've had some good trades on crude oil. Actually, crude oil at one point was one of the better. It's had some really good patches over here. I mean, some amazing, amazing moves. So yeah, it's wobbling a bit at the moment, but it's actually not been terrible. So you want something that has a clean behavior for most of its lifestyle. That's, I think, would be a rational way to do that. Do you know if building an FX list filtered in function of opposite currency strength direction is something really efficient? Yes, I do. And these questions are coming through from different people. This is fantastic. So if you're asking me about a currency strength, weakness kind of thing, I absolutely think that's a fantastic thing for folks to have a look at. So that's kind of what I did here. I sort of did that. I ran through all the euro pairs. All the euro pairs are generally breaking to the upside. So clearly the correlation there is the euro itself is looking relatively strong. And yes, absolutely trading the strongest against the weakest makes sense. So maybe a weak pound against maybe a strong yen or a strong Swissy. Yes, absolutely. I think it's a fantastic way to go. Gold is hard for a beginner. Yes, agreed. Would you be so kind as to explain about the imbalance of block orders? Do you think all this imbalance needs to be filled? I need a bit more information on that. I'll tell you why, because most of these instruments, no, all of these instruments are all liquid. And during certain sessions they move. The rest of the time there might just be a smaller session like the Asian session or something, and it's not as active and the liquidity is lower just because it's just not as many people trading it. But block orders and stuff like that, in terms of I've not found that to be, like, for example, volume split analysis or certain areas where there might be a density of orders, those are additional things. I know you can get some indicators that will show you sort of a spread of analysis and trades and volume, and you can get sort of a volume sort of graph that gives you a density of that. But generally, those are around support resistance levels, and for the most part, if it's trending well, that it's just you're just, I think, getting the same information in different ways. But so if we've got a nice trend, support resistance levels really is what it kind of ultimately comes down to. What are the other questions here? Because I'm keeping an eye on the time. Yeah, do that as well. As a beginner, which time frames would you advise us? Oh, these are the best. Okay, so here's the thing. I would have, for myself, the lower time frames move really quickly. And this is my opinion has changed over the last couple of years. But here's the thing. In the beginning, when I'm trying to build, pretend I'm you, or I'll pretend you're me or whatever. In the beginning, when I'm trying to build up my skills, I'm trying to learn how to draw support resistance levels. I'm trying to learn about different candlesticks, and I've got so much brand new information I have to take on board. It's better for me if the market is moving slower. So that means the 4 hour, the 1 hour, the 4 hour, the daily, probably the 4 hour and daily are the best, because it's moving so slowly that I have enough time to look at the charts and go, okay, is that a setup? And I have enough time to really think about the setup, check different things, and then place an order if I think it's there. So, and then what happens is, first of all, it's lower volatility. So the daily generally is not impacted so much by economic news. The spreads are very small as a component of the trade setup. And actually, if things are going well, you can take 2 to 5 trades in a week. So you can do relatively well, and you only have to check it at the end of the day. So the higher time frames definitely have some appeal, and you can spend more time absorbing while you're still learning how to trade. You can spend more time analyzing the trade, and it's not moving so fast away from you. As soon as you go down to the lower time frames, you don't necessarily make more money. A lot of people in the lower time frames lose more money because the market's moving so fast. They buy and then realize, oh, it's the higher time frames actually going the other way, so I should have been selling. And so actually you can bleed a lot more on the lower time frames. So for me, if I could go back in time, I would have said to myself, listen, Adam, do the daily and the 4 hourly for 3 months. Once you've kind of really started to master a lot of information and experience building trades, go down to the 1 hour. So in other words, I'm adjusting to the faster moving markets, but I've also started to build up experience, and I'm, because trading is not one of these things you can shortcut. It's like the tortoise and the hare race. You unfortunately will only, if you go slower in the beginning, you'll get to a place of better experience sooner. Often what people do is try to shortcut it and then have to go back to a higher time frame, or to going back to studying their strategies again and all that, because they've wasted time kind of getting distracted by other things. So then you waste time and you have to go back, and then you progress a bit. So generally, ironically, being patient and being slower will get you where you want to be in a year's time a lot faster. So that's what I would say, and then go down to it. So these days, I can take a trade setup, for example, euro dollar, case in point. Okay, I want to go long on euro dollar. So first of all, I look at it on the daily. Let's go look at this. It's not in a confirmed uptrend yet. So what do I need to see? I need to see this really to really get a sense of bullishness. Fine. What's going on the 4 hour? The 4 hour is in an uptrend, and if I'm right and the daily is going to push higher, the dollar is going to weaken, we're going to see it head high, then I should get some bullish candles here. I really, really should, which means by this time tomorrow, what should happen, if that's going to be the case, is the euro dollar should climb. Between now and tomorrow, it should head up. If it comes back down here, that actually unfortunately reintroduces the idea that maybe the euro is not strong enough yet, or the dollar is still too strong, and maybe the time it's not going to happen. So if I see a nice bullish candle that forms in this area in the next 8 hours, that could be the turning point before it heads higher. So I could take that trade. I could put my entry above the high of it, stop loss below the low, and target a 3 to 1. And if I wake up in the morning and I've been stopped out and prices down here, I know which of those, what the story is. I know which way the story is unfolding. And in that reason, I think for now, I would prefer to trade the 4 hour on the daily. Once the 4 hour has started to push up and the daily is starting to look more and more bullish, then I would go down to the lower time frames. Then I would go down to, say, the 15-minute, because now I've got a really nice strong move. And so we had a couple of those. Like if you look on some of these yen pairs, let's look at euro yen, you go down to even the 1 hour here, you can see we've had some really good, nice trends lately. It's really nice and strong. I need to see this kind of trendable behavior, which I'm not seeing at the moment. Good if you create your Discord group. Yeah, Discord, yeah, as well, so people can learn from you. Thank you. It's so easy to understand you. I really appreciate that. I really enjoy doing it. I find that when I have to explain my thinking to other people, that makes my trading better. Because sometimes if you don't explain your thinking to other people, you can lie to yourself. You could take a trade and then someone else says, why'd you take the trade? And then you have to be honest. You're like, well, okay, I thought I saw this, or I thought I saw that. It's always fun that actually talking to other people makes my trading better. So yeah, just to recap, where am I looking for these? I'm expecting, there's a lot of signs that show that euro, we could be seeing the US dollar could be preparing for a much longer kind of correction, maybe a few weeks, possibly 1 or 2 months. The euro is looking the strongest of the bunch. Looks like it's very keen across those euro pairs to change trends. Some nice bullish divergence. Some of the yen pairs still look really good, but I'm also concerned that they might run out of steam at some point. And then the only other pairs that looked, and you don't always get this many potential opportunities across the board. You don't. Sometimes it's just maybe the euro pairs or just the yen pairs. But I'm also seeing some of these Swissy pairs, where, as I said, they're starting to look more and more bearish. Some of these are looking, they're nice and bearish. They might want to pull back and then carry on down. So I need them to come back, possibly into these areas. Those sorts of things. Those are the Swissy pairs heading lower. So my favorites right now are the euro pairs, potentially in the coming weeks, this week and next week, going up. Maybe some of the GB pairs heading lower, and some of the Swissy pairs, pound Swissy, maybe even euro Swissy, CAD Swissy, Aussie Swissy, heading lower. And then I'll also look at some of the yen crosses to see if they offer any of those other opportunities. So that was it. I mean, so I just think that there's a lot. Some of you have been attending these webinars for a couple of months now. You've seen not every webinar where we run through stuff are there that many opportunities. I just think that what I'm seeing now is there could be some good stuff going on. So for those of you, again, I want to say thank you to all of you for giving me your time, and I really appreciate it. I love all the questions. Bring them, and I hope that I can answer them to your satisfaction as well. That's really something that I want to do. It's always, how do I set my alarm for potential trades? Again, the journal is a good idea, or I can put an alert on the chart on MT4, MT5. You can place an alert, and if price crosses that level, you can then get, I think you can get a text message or an email, or you can get a sound on your computer as well, which will help you say. And you should always put a note with an alert. Always put a note with an alert, because otherwise the alert goes off and you go, I can't remember what I was looking for, because maybe you're looking on the 1 hour, and actually it's something you need to be looking at on the daily or the 4 hour or some other time frame. So you should always have an alert saying 1 hour charts, looking for flat level breakout, or I'm looking for a retest of support, or I'm looking for bullish candle, I'm looking for buy positions. And then you're like, oh, okay, because don't trust yourself to remember anything just yet. There's too much stuff in the beginning for everyone. So ladies and gents, thank you very much. I hope you enjoyed that. If you have any questions regarding your account or setup of your platform or anything like that, please don't hesitate to get in touch with the lovely folks at icmarkets.com. And as always, I'm usually doing one of these every week. I'm on holiday at the moment, but usually I'm doing 1 or 2 of these each week. And you're always, as I said, you're always welcome to come through, bring your questions, and don't be shy. Don't be shy. There's no reason to be shy. And then, yeah, I look forward to seeing you in future webinars. I'm going to let you go now. Thank you very much. And last thing, for those of you who you might want, if you want access to a copy, you know the rules. If you want access to a copy of the recording, just send me an email to this address and I will send it through to you tomorrow. Okay, so that is the email address, adam@tradewithprecision. Just make sure you get the I's and O's and everything all correct at .com. Send it through to me, and if you want a copy of it, and I will gladly forward you the link. Okay, so there we go. Thank you very much, ladies and gents, and enjoy the rest of your evening. Thank you very much. Thank you.